friends, I'm Becky and welcome back to Break Brilliant Finance. Today we are diving into Treasury Bills and Treasury Bonds, how they work, what are they, and how can one invest in them even when they are outside the country. When we talk about Treasury Bills and Treasury Bonds, think of lending your money to the government. The government doesn't come direct to you. It goes through commercial banks. So you lend your money and in return, you earn interest. When you invest, you can buy in two markets, what we call primary market and secondary market. Primary market, this is when the government first issues Treasury bills and Treasury bonds through auctions at the Bank of Uganda. Then you buy at the auction price. Secondary market, this is when you buy from another investor who wants to sell T-bills or T-bonds before maturity. But for today, I'm going to focus on primary market. So in short, T-bills are for short-term period or short-term investment, 1 year and below. Then T-bonds are for long-term investment from 2 years to 25 years in Uganda. Let me first talk about Treasury bills so that I don't confuse you. Treasury bills are short-term government securities. In Uganda, they always come in 3 tenures: 3 months, 6 months, 12 months. They always put in days: 91 days, 182 days, 364 days. How much do you need to start investing in Treasury bills? All you need is 100k Ugandan shillings, and you can invest in multiples of 100k. How interest works on T-bills? The way they pay T-bills interest is different from the way they do it with T-bonds. Let me say, they sold for the T-bills, they are sold at a discount. For T-bills are sold at a discount, and when they mature, you receive what we call a full face value. Let me give you an example. Suppose that your T-bills are worth 100k. On auction time, you're not going to pay that 100k direct. You're going to pay, let me say, at 90k because of discount. So it means your interest is 10k. But on that 10k, they deduct withdrawing tax of 20%. So it means that 8k that has remained. So remember, you had paid 90k. So it means when it matures, at maturity time, you're going to get 98. Hope this is so clear. Now, so it means you paid 90, but at the end of maturity, let me say after 3 months or 6 months or 1 year, you get 98k. So it means your interest there, it is 8k because initially you paid 90. T-bills are best for short-term goal-oriented savings, like school fees. Maybe you have a wedding in 1 year, or you want to buy a land or a car in 1 year, 6 months, 3 months. Then if you don't want to go for money market fund, then T-bills is another option. I advise it when it's something you don't want you want to fix your money, then T-bills is there for you. Remember, I talked about money market funds, so you can check on my previous video about money market funds. So my advice, if you really want something for short term and you want to fix your money, then you can go for T-bills. Who can invest in T-bills or T-bonds in Uganda? Any individual, any company, any circle, all can invest in T-bills and T-bonds in Uganda. So let's move to Treasury bonds. Treasury bonds, as I've said earlier, it is long-term government securities. They have 3 categories: short-term bonds, medium-term bonds, and long-term bonds. Short-term bonds, it is actually from 2 years to 3 years. Then medium-term bonds, it is from 5 years to 10 years. Then long-term bonds, it is from 15 years to 25 years now in Uganda. The minimum investment is also the same as T-bills, 100K, and you also invest in multiples of 100K Ugandan shillings. T-bonds pay interest twice a year, and we call it coupon. And also, once you lock your money in T-bonds, you can get it at maturity time, and the interest is fixed. If you want your money before maturity time, you can sell it back to the government, and this time in secondary market. But not in secondary market, you can even make losses, depends on the demand of the money. If the demand is low, it means you're going to make the losses. T-bonds are perfect for long-term investment. If you're thinking of retirement, if you're thinking of passive income streams, any long-term investment, T-bonds are the best for you. So how to invest? All you need is SCD account, Central Securities Depository account. You can't go direct to Bank of Uganda to open that account. You have to go through your commercial bank, which acts as your broker. You walk into your bank and you tell them that you want to invest in bonds and you want to open a SCD account. In bank, they are going to ask you your valid national ID copy plus passport photo. They will give you a form that you're going to fill. After that form, it will take like 2 to 3 working days and you will have your SCD account. So you will be ready. It is free of charge. And when you reach in the bank, you can ask any question about bonds, investing in bonds or investing in Treasury bills in Uganda. You can take that opportunity to ask every question you want to ask. So it means now after filling that form, it will take you to 2 to 3 working days and you have that account. It's free of charge. Maybe you will have to pay what they call brokerage fee when you're going to invest. It is around 1.5% to 3% of your investment. And that only happens when you start investing in Treasury bills or Treasury bonds. But opening, it is free of charge. A Ugandan outside the country and you want to start investing in government securities but you don't have a SCD account, what are you going to do? Send email to your commercial bank back in Uganda. Request open SCD account so that you can be able to invest in government securities. Explain to them that currently you're not in Uganda. They will give you the request for some requirements they need, like maybe Ugandan national ID, passport photo, the current country, your ID of the current country, and all those documents. Once you send them back the documents, most they make appointment with you for video calling where you'll be holding maybe your national ID and all that. They will tell you what they need from you. Some banks do open when you're outside countries and some banks they don't. So first check with your bank if they are able to open a SCD account when you're outside the country. What else do you need to know about Treasury bonds? They are taxed. There is withdrawing tax on your interest. Below 10 years, the T-bonds of below 10 years, it is 20% withdrawing tax. 10 years and above, it is 10% withdrawing tax. Treasury bonds being long-term government investment, they have also good advantage of capital preservation. It is also safest. You can earn steady interest and also it can be your passive income stream. If you found this helpful, don't forget to like, comment, and share with someone who may benefit. Also, don't forget to come back for part 2 where I'll be sharing about bidding process and how you can use T-bonds as your passive income. See you in my next video at Becky Brilliant Finance. Thank you. Bye-bye.